Hi, and thanks for requesting the free report about buying a home using the special U.S. government home loan programs that are available. A lot of home buyers think that they need to save for a huge down payment in order to buy a home, buy the home of their dreams. You know, this simply isn't the case. The U.S. government wants you to own a home and has created special home loan programs that'll help you buy a home with little or no down payment. Not only that, but both the IRS and the state of California offer home buyers tremendous tax advantages for owning a home. They don't offer these same benefits to a renter. So let's get started. I'll give you a brief overview of the different loan programs that can help you buy a home with little or no money down. Then I'll review the special tax breaks that the IRS and the state of California give homeowners but don't give renters. There are currently 5 different special government home loan programs that are designed to help potential home buyers buy a home with little or no down payment. Imagine that. As I said before, most renters think that you need 20% down to buy a home. It's just not true. So I'll start with the biggest and most important program that's out there right now, and that is FHA. This is by far the biggest and most important low down payment loan program that there is. The FHA 203B, or what's known simply as an FHA loan. FHA stands for Federal Housing Agency. This government agency administers this loan program for the federal government, and it works like this. Private mortgage companies make the loans to homeowners, and the FHA program guarantees that the mortgage companies won't lose any money if you default on your mortgage. The mortgage companies have to follow strict FHA guidelines to make sure that their loans are compliant. FHA requires a 3.5% down payment of the purchase price. So on a $200,000 home, that would be $7,000 for down payment. On a $300,000 home, that would be $10,500. That's a lot less than the conforming loan that requires a 20% down payment. That same $300,000 home would require a down payment of $60,000. FHA loans are mostly 30-year fixed rate loans at very low interest rates. The FHA does offer a fixed adjustable loan program that has payments fixed for the first 5 years. The advantage there is the interest rate is lower, and hence your mortgage payments would be lower. The next important low down payment loan program is FHA Access. Now, FHA Access is actually a combination of 2 different loan programs. FHA, the standard FHA, with the state of California Access Second Loan Program. The 2 of them come together to form a 99.5% combined loan amount, meaning that the down payment requirement for this loan program is only 0.5%. On a $300,000 loan, that means a $1,500 down payment. That's pretty incredible. It comes, as I said, with the standard 30-year fixed rate loan that comes with a standard FHA loan program. Now, this loan program has very specific income guidelines and other restrictions, so it's a little bit more complex to get rather than the standard FHA loan. The other loan program that's great, USDA Rural Housing. You'd be surprised what qualifies for rural these days and housing in rural areas. This is another one of these great federal home loan programs that not a lot of people know about or use. It's designed to provide housing funds in non-urban areas. So it actually works in small cities and towns, but not in the big urban areas. So anything in a small city or town, and then out in the rural countryside, it'll work very well for those things. Interestingly, this loan program provides 100% financing. So you have no down payment at all. It's a great loan program. It offers great low interest rates and 100% financing. There are income limitations and, of course, location limitations, but great loan program, nothing down. The next 100% down loan program that's very good is the Veterans Administration Home Loan, or VA for short. It's another government loan program that's designed, now this one is designed for either active duty military personnel, or it's designed for honorably discharged veterans. Like the USDA Rural Housing Program that I just mentioned, it provides 100% financing, so there's no down payment required at all. It also comes with very low interest rates on a standard 30-year fixed rate loan. There's no location restrictions, and there's no income restrictions, so this is great as long as you're either active duty military or you're honorably discharged veteran. Now, the final of the low down programs is is what I call county down payment assistance program, county down payment assistance programs. So cities and counties throughout the state offer down payment assistance for home buyers within their counties or cities. Each of these programs come with their own restrictions and guidelines to them, both income, first-time home buyer, things like that, and location. So it needs to be within the locality of the program. But these programs do exist. It's hard to mention each and every one of them because it depends on the locality, the city, or the county that you're talking about. But if you qualify, and there are a lot of restrictions on these, but if you do qualify, they're great programs to have and to be able to work with. They work much as the Access program in conjunction with the standard FHA loan. So the two of them come together and typically remove the down payment restriction or the requirement that's there. The final thing that I wanted to go over with you was the tax break that homeowners get. Now, both the IRS and the state of California allow homeowners to deduct the money that they pay for their mortgage interest, their property taxes, and mortgage insurance. And they deduct that from their taxable income. The result is, if you're a renter, you've got a certain taxable income. If you're that same renter and now you've bought a home, you take your taxable income and subtract from it the amount that you paid in the throughout the year for mortgage interest, property taxes, and homeowners insurance. And so what that does is it gives you a lower taxable income and therefore a lower tax. So homeowners typically pay much lower income taxes than renters. So it's a good thing to take a look at this. In the free report that I put together, the printed version, you'll see there's a little table that just gives you an example of what the numbers look like. So it makes a nice thing to take a look at. When you do that, it's important to go and talk to your tax preparer and ask them to look at your numbers so that you have a real clear idea of how this is going to impact you. But it can impact you several $100s a month. So it's a great thing to take a look at. Well, that wraps it up. If there's anything that you'd like to ask from me, feel free to give me a call. Otto Kobler, 707-522-6300. Thanks.